thought I had a countdown before. But hey, welcome everyone. This is our podcast, Kev Jai. So I got a question for you, Jai.
Sure. Go
If
ahead.
you can go back in time, what financial decisions would you make? Like strategic decisions would you make
Hmm.
back in your 20s? You're in your whatever you want to talk about.
I know, right?
The reason
Oh,
why I ask is because I think a lot of times one of the biggest problems is we get financial aptitude and learn about finances a little bit too late in life.
yeah,
So hopefully we can teach our younger selves or teach the younger generation things to do proactively before they're older. That would definitely help them in the long run. I think a
correct.
lot of times what people don't realize is money isn't really the value add. It's really time.
Very
Time
true.
is your biggest ally. Time is your biggest value. And so the whole point is if you can save and you can put these things in place now, later on it pays off in dividends.
Very
So
true.
what would you do? What would you say to yourself if you can go back in time and hey, 20-year-old Jai, here's what you got to do.
It's a loaded question because there's a lot of scenarios I could play back in our generation, at least. One of the things that we thought was far fetched was buying property. And I think if I had to play it back and look at the past, I would have invested earlier in purchasing property because at that time it looked like, why wouldn't you buy property? You could just rent, you know what I mean? But the same amount that we used for paying rents then could have paid a mortgage. The other thing I think that I look back at and I just think about was hindsight's 2020, investing in things like gold. What was the price of gold then compared to now? Per ounce, I would say it was nominal. And looking at the price of gold now and the way things are going, gold is the way of the future. So these are some of the things I look at. Of course, there's a lot of things that I could do, I could have done in my 20s, but I think property and buying gold are one of the two major things that when I look back, I think I should have done a lot earlier than I did. And that's one question we have to ask ourselves.
Yeah, no, I agree. I think at the end of the day, thinking about it from an investment perspective as opposed to a renting or just a quick win, that's definitely something that we need to think about when we're younger. So definitely buying property. Another thing I would think about is also just getting into stocks.
Yes.
Stocks are a
Yes.
simple way. You don't need a huge amount of money.
That's true.
That counter to what you said regarding homes, purchasing is a major investment.
That's
It's going to
true.
require a lot of capital. You're gonna need credit, things like that. And I think with stocks, as long as you're 18 years old, you can definitely get
Sky's the
into
limit.
it. And another thing too, this is a little bit fringe. Um, Trading, understanding how the stock market works. Maybe get into a little bit of day trading, things like that. You don't need to be a professional in it, but you can do day trading. You can make going short, going long. Basically, what that means, you have day traders that just trade on intervals like hour, day, hour, minutes, things like that. But then you could also do some trading where you can hold a stock or hold an option for a couple of days and then you can sell it. Small money, but at the end of the day, I think you'll agree, Jai, small money is really what actually makes a fortune.
Correct.
The average person that make tons and tons of money off of a windfall, typically that's a lottery winner or something. Nine times out of 10, they end up losing all that
That's true.
because you don't know how to actually handle that money. And a lot of times, when you have a lot of money in a large, quick way, it can dissipate on you unless you're really disciplined. So I agree with you. I think at the end of the day, houses, stocks, investing, doing a little day trading, things like that. Another thing too is maybe just arbitrage. What that is basically you just buying stuff,
Yep.
selling stuff,
Buy and sell.
buying it on eBay or selling it in a cheaper platform, maybe Kijiji.
Commerce. Yep.
Exactly. Retail arbitrage. Looking for sales, looking at buying things in wholesale from say Walmart or a thrift store, stuff like that's a really nice way for you to start building some residual or multiple stream or an additional stream of income.
Correct.
So I think definitely that would be it.
The other thing I was going to add to that is in your 20s, you're willing to take more risks. because at that point you don't have most times you don't have any obligation. People are not you're not feeding people. You don't have a family, and it's like there's less mouths to feed, so you're willing to take more risks. And I think it's more your mindset at that time too, because you're younger, you feel that you can conquer the world. So even if you were to make mistakes, there's still time for you to make up for those mistakes that you've made, as opposed to now where you make a financial decision and you make a mistake, it's going to cost you. But your younger self, it's, yeah, I can make it back in 2 years or 3 years.
Exactly. And don't you think that it better you take risk when you're younger than older?
Oh, yeah.
I find sometimes we don't think about it like that. We think we don't have a lot. We have so much time on our hands. We play it safe. And then when we get older, we realize the time is
Time is
going and then we
gone.
start taking some chance.
I know. Because,
What do you think about that in terms of taking risks versus doing it the safe way? What are your thoughts on that with respect to being younger?
well, as I said, like I was saying earlier, like being younger, depending on most people who are younger in their 20s don't have financial responsibilities in terms of other people that they have other mouths that they have to feed. They they're not thinking about retirement, at least at that age. So your chances of taking risks are a bit higher. You have the aptitude to take more risks. Now, the other thing about that is when you get older, and the reason why you don't want to take so many risks is because you're thinking, how can I make up if I lose some money or I lose whatever I'm investing in? So you don't have as much time, you don't have as much, you just can't take that chance because you don't know if you have the time to make the money back. Because you're looking like, okay, I'm in my 40s. Before you know it, I'm in my 50s. I ought to be retiring by now. As opposed to in your 20s, you're like, yeah, I can make it back maybe in my 30s and I'll be okay. Plus, the other thing is you don't have any responsibilities. You know, your 40s, most likely you'd have a wife and a kid or two, and there's tuition, it's college funds. Those things they play a huge factor. When you're on your own in your 20s, you could care less. You could sleep on the couch in someone's basement. When you have responsibilities, what are you going to tell your wife and kids? So a lot of those things play a factor into how you make financial decisions. So
Right.
you can make those changes. You can take those chances now, but make sure they're informed decisions. But start now. Don't wait. To your point earlier, you talked about you have money, maybe not buying property, but you can start with stocks. Those things are, you don't need a lot of money. You don't need a lot of capital. You can start options, trading, just learn about it. And anything finance, you have to learn early because if you cultivate that habit, it helps you grow. And in the long run, you'll be thankful for it.
And you know what? We both missed one.
What's that?
We missed a critical one.
What's that?
Any idea? Want to guess? No.
And I'm just thinking, no, not at the top of my head at least.
Starts with an I. Insurance.
Insurance. Oh,
Yeah.
yes. Oh, man. How could we forget that?
We totally forgot about
That
that.
is
Insurance.
huge.
Huge.
You know what? I think that should be the number one. Getting
You're
a
right.
life, just, you know what? Scratch everything we said. I think don't scratch it, but insurance is huge. No, it's funny, but it's huge because as the older you get, the harder it is to find insurance premiums
And
that are lower
costlier,
and
more
they're
expensive.
costly. Yeah, they're more expensive. And a lot of times, depending on your habits, you might not even be insurable. The older you get, the chances that you've had some kind of ailments creep up is higher. So you can get insurance younger. You're paying what? Anywhere between $50 a month or something even less. Some of them are even like you pay for 25, 30 years and you don't have to pay again for the rest of your life. So yeah, insurance is key. I think
Yeah.
that should be number one, getting insurance. Yeah.
And not just term insurance.
No, not term.
You
That's
want to
right.
get, like what you said,
Whole
Joe,
life.
participating
Yep.
fund-based insurance where it gives dividends after, say, 20 years of paying.
Correct.
And now, whatever you put into it after 20 years, it starts paying you
Starts
back
paying
in
you back.
dividends,
Yeah.
literally. It's tax-free or it's a tax haven
It's a
as
tax
well.
haven. Yeah.
So you don't have to worry about, say, the government and things like that poking and digging into it. The other thing too about these types of insurance, again, all there's different types of insurance products. Me and Jai, we're just talking about the
The dividends.
dividend-based insurance, the participating fund type insurance or segregated fund type insurance. But those insurance policies, they have a 20 term. And then at the end of the day, you have two major pieces. You have the death benefit and then you have the cash benefit. And so the cash benefit, if you do this long enough, you put in enough into it, after say 20 years, you'll have, say, let's say a modest, maybe $100,000 in death. Maybe you only have $50,000 in cash benefit,
Hmm.
but you can borrow against that money. You can take that money out and not have to borrow 50,000 from the bank or 10,000 from the bank. You can borrow against your policy because that is the cash balance or the cash benefit of that policy. It's basically the dividend interest or the dividend portion of that policy. So definitely something that we missed. We should have had that
That
as
was a big
number
one. Yeah, it's
one.
number one.
Um,
And
but
to add to, sorry, to add to what you were saying about insurance, I think for the younger folks out there who are listening, there's a lot of material online about insurance. You don't need to go to a class about it. Just the time you spend scrolling through Instagram or Reels and all that. And I'm not saying, I'm not discouraging you from doing that if that's what you like doing, but look up insurance. I think it'll intrigue you how easy it is for you to get into insurance and make money from it in 20, 30 years. I think that's one thing as folks where we miss the boat when we're younger. And it will be good for the younger generation. And I know a lot of families are capitalizing on it now. But for the younger generation, for folks out there who don't know anything about insurance, I encourage you to look into it. And definitely, if you want to learn more about our YouTube channel, you can subscribe to Kevin and I will talk about that. We have topics about insurance, but it's a good way to start.
yeah, exactly. And lastly, I always look at finances and money as a tool. Myself and you, Jai and myself, we're quite successful in our own right. We own multiple homes and we have kids, nice cars and things like that. And again, the material stuff isn't important, but I always look at money as just a tool. If you give money too much credence, then you're going to give it too much power. And then when you give it too much power, you worry about it too much.
Sure.
So just think of money as a tool. Think of money as just a hammer. I like the analogy of a hammer because a hammer can build or a hammer can destroy. And I look at money as just a hammer that can help me build. I focus on my passion, focus on things that I'm good at. Another thing that Jai and I are saying, and it's just a general thing, is in addition to housing and insurance policies and investing, what I'm trying to get at is multiple streams of income. The whole point is to have multiple streams of income. And the more streams of income you have, the more you solidify your future. I think in the future, just having a degree and having plaques on your wall, and I don't think that'll be enough. I think in the future, you're going to need multiple streams of income. This world is so globalized. There's so many ways to be creative and monetarily benefit from that creativity that you have.
No,
My
great
colleague
points.
here,
Great points.
let my colleague here say the last thing, and then we'll wrap up.
Great points, Kevin. I think at the end of the day, research and reading are your are your keys to success. So if you don't know enough about a topic, research on it. So we've talked about insurance. I think that's the big taker from this episode. And read about finance. The world, finance runs the world in a way because you need money to do things. And to Kevin's analogy about the hammer, you can use it to create wealth or you can use it to destroy yourself. Well, how do you want to know how to use it? That's up to you. Do more research about these things that we've talked about today. What I will stress, research on insurance. It's big.
And if you don't read like me, audiobooks.
Yeah. There's options out there. In 2025, there's a lot of options. So you don't, there's no excuse to be ignorant. Let me put it that way.
All right, that does it. Once again, thanks for listening. Thanks for joining. Click and subscribe if you haven't already. If you have any topics, any ideas, me and Jai will love to talk about them. The whole idea is to engage you guys, give you guys some great. All right, signing off. Once again, talk soon.
Talk soon, guys. Wow.